it does take us to our talk of the tape. Tech's toughest test yet, with those key earnings looming in overtime. With us to debate and discuss what's really at stake this evening in overtime is Stephanie Link, Hightower's chief investment strategist and portfolio manager. She's been buying more Amazon stock lately. Malcolm Ethridge of CIC Wealth owns Apple and Amazon. And Virtus's Joe Terranova, he owns Apple and Meta and several of the other mega cap names as well. All three, of course, CNBC contributors. Welcome, everybody. So everybody owns Apple. Steph, you're a little underweight than most in the name. It's the worst performing of the mega caps since November 1st, since this market really took off. What do we think we hear tonight? What do you think investors need to hear after 4 consecutive quarters of negative revenue growth?
Well, it's definitely a show me story at this point in time, especially with the valuation at 28 times for 50% of their business, which is iPhones, if that's only going to be up 2 to 3%. If they can beat that number, that's interesting. But services is the next piece. That's 22% of total revenue. It's expected to be 10 to 12% growth. That's going to be important to see if they can come in above. And then also China. How bad is the iPhone 15? Expected to be down double digits, while base phones are actually going to be up. So your mix shift is all over the place with margins and revenues. But I think what you need to hear is better growth in services going forward, because that's the real exciting part of the story, and some sort of excitement around the iPhone 16, because it's not only the 15 that's kind of bland, it's the 16 as well. So what is the visibility for half of their business overall?
Okay, so we have seen time and time again doubt Apple and doubt this stock at your peril.
Yeah.
Joe, is it fair to say that this comes in, and it's so strange to say it, with the most uncertainty of all the mega caps, just given the fact that you got the consecutive quarters of negative revenue growth? The stock's given up its title as the most valuable in the market to Microsoft. You have reports of these double-digit declines in iPhone shipments. We got a lot of questions we need answered.
Tremendous challenges for Apple. And yes, absolutely, the expectations for Apple amongst the Mag 7 or AI 5 or whatever we're calling them today is the lowest. You also have regulatory concerns in Europe. Stephanie already cited what's going on in China. And do I get excited about 1% revenue growth to take? Okay, so we're not going to do 5 consecutive quarters of contraction, but 1%, I'm really going to get very excited about that. I just think that, look, this company has gotten a pass because they have so much cash. They have the fortress balance sheet, and you know they're going to buy back their shares. Tonight, I want Tim Cook to come out, and I want to hear the vision for AI. I want to know what their vision is for AI. How are they going to adopt it at Apple? And
part of their vision, just to steal that word from you, is about their Vision Pro. And, there's a big, glossy Vanity Fair spread that's hitting the newsstand, so to speak, today. Yeah. And, they call it Tim Cook's moonshot. Is it going to be successful? It's a big deal, and it's a big bet.
I'm not going to doubt the potential success of it, but I need more than just the hardware. I need to understand where we're going with AI. And you know what's interesting? For the very first time, I don't think the analysts are afraid to downgrade Apple anymore. That was something that was unacceptable. If you downgraded Apple after an earnings report, it seems as though it's becoming a little bit more popular. I want to see where we are in that next several days.
Malcolm, the analysts have kind of learned the hard way when they've downgraded Apple, because in many respects, it's marked a near-term bottom. The stock was at 167, 169-ish not that long ago, and there were haters all over the place saying the chart looks terrible. What's going on with this company? Its growth trajectory? Is it stalled? What's going to happen here? And then it's roared back north of 185, and it sits right about that, and it had moved back towards 200. How do you think about this going into tonight?
Yeah, I don't think anything that you guys have said to this point on Apple is incorrect. I do think, to the question you just asked me, the reason that Apple is able to hang in there is because their past performance, right? So their reputation as being second, third to the party and figuring out a way to blow it out of the water is what analysts have been hanging on for all of this time, scared to downgrade it, not even reluctant, scared to downgrade that name for fear of being caught out. And I think that even after Apple gives us lackluster earnings once again today, they're still going to get a pass all the way up until about June when we get WWDC. If there's not anything substantial telling us how Apple plans to integrate AI into that ecosystem by that point, then we could see a significant sell-off in Apple shares. But I think that we're probably going to see them, regardless of what the numbers are today, kind of just go sideways between now and then, market perform, let's call it, between now and then, because they will get that mulligan just based on their reputation to today.
You know, the other point, Steph, is, you know, this is a stock that has traditionally run a lot into the earnings report. Almost every quarter that happens. And I'm not suggesting that it hasn't had a nice move to start this year. It was up 9% or so. But I also said that it has underperformed the other mega cap names, which have done even better. Wonder what that does to the stock reaction this evening.
Well, I mean, rightfully so, because the growth is a lot lower, right, at the overall for the company, as I talked about, in terms of the majority of their business. I think this company really benefited big time from COVID. And now you're kind of seeing the reverse effects, especially on Macs and especially on iPads, too. Plus, in services, they also have really tough comparisons coming up. So there are a lot of question marks, and I think guidance is going to be obviously key. We always talk about guidance. That's so super important, more than ever.
I love that year-to-date chart that we put up. It shows you now, you know, that the stock was right pushing back towards 200. Let's throw that one back up there, guys, if we could, please. I think that tells a great story. If the earnings report was on the back end of 196, I'd say, oh, well, that may be problematic, but it did have that, you know, sell-off by about $10 or so. Yes, it's recovered, albeit slightly, but nonetheless, that adds some interesting questions right into the print. Let's move to Amazon. I'm coming to you here because you've been adding to this name. You have sold out of Meta, which we'll get to. You've sold out of Alphabet, and you have picked this as your winner. Why?
Yeah, and I will be buying it hand over fist if it's down tomorrow as well. I want to be bigger because I think there are three ways to win. I think the cloud business is exciting. It's growing at about 13% this quarter. And I think they're going to give you a pathway to get to 17% by the end of this year. They signed a couple of contracts in October, right after they reported last quarter. So you kind of have a little bit more visibility of a reacceleration. So that's one. Two, retail sales. Remember, December retail sales online grew 9.7%. They're taking share. There's no question about it. And so I think retail will do okay. Little bit of promotional activity, which is seasonally what happens within this particular quarter.
Are you watching profit margins as a result?
Exactly right. So they did 4% last quarter. I think they're going to do 3.8% this quarter. But I think there's also a pathway to get to 7%. And so I think that is the exciting part of the story. You know, I'm a margin person.
Yeah, I know you are.
One last thing, then Prime. That should help the ad business.
I was going to ask you about that, too. That's a piece, and I'm just wondering, where's the bar in terms of AWS growth after what we got from Microsoft and Google? They showed pretty strong cloud growth. I
think it's still about 13%. Anything above that, I think people get really excited. But again, if they can talk about what they have signed in October and what the momentum was and the cadence was throughout the quarter, I think that'll be really very, very important. This stock trades at 13 times EBITDA, Scott. The historical average is 18 times.
I know, but it's 41 times forward.
But it's also 2.4 times price to sales, and the sales growth is growing mightily. So I think that this one makes the most sense. It is very hyped up, though, into the print, very liked. I know the sell side has like 100% of the sell side have buys on it. You know I'm not crazy about that. But the momentum is there. The story is great, and there's a lot more that Andy Jassy can do and team.